Cool. Well, hello, Magnet members. My name is Alex Vitani. I am the vice president of the organization, and on behalf of all of us on the board, just wanted to say hello. Sorry that we haven't been able to see you guys. Obviously, with everything going on in our world, we certainly miss you, and have been thinking a lot about you guys and how to stay top of your mind and still deliver you some of the content and the connections that you guys look for as part of your Magnet membership. So today we're going to start something new. Hopefully you find it valuable, but we're going to do a little ongoing web series, hopefully ongoing web series, we'll see how it goes, called Coffee Conversations. And the hope is to have short, brief, conversations with folks that might have information that they can share with you, things you might be interested in, in Madison, things that are going on in Magnet, whatever it might be, that you can digest over a cup of coffee. So the hope is to have maybe 15 or so minutes of your time just to share some stuff with you too. So today I've got with me Tim Bickmore. So Tim is a Magnet member and actually former vice president of our board as well. So he's very familiar with our organization. And today we're going to have a conversation with Tim about some of the ramifications related to personal finances, savings, investments due to the COVID-19 pandemic, which we thought was pretty relevant, especially for young people. Our generation kind of squeezed with student loans and maybe mortgage payments, unemployment issues these days too. So wanted to have Tim talk a little bit about maybe some small things that you can do, give you an overview of what's going on and any advice that him and his firm may have. So I'll give Tim's brief bio and then we'll jump into today's coffee conversation. So Tim Bickmore is the co-founder and director of financial planning at LBW Wealth Management. Tim holds a Series 65 license, which I will let him explain what that means because that's French to me, and is a certified financial planner and a certified private wealth advisor, which are very important certifications and something you should be looking for in the folks that might be handling your finances now and into the future. He's a current board member of DAMA, and he lives in Monona, Wisconsin. So Tim, thank you for joining us today.
Thank you. Appreciate it. Happy to help out and happy to have a conversation. I will admit I have water. I don't have coffee because I don't drink coffee. You don't want to see me on caffeine, but I do have a drink.
That's okay. That's awesome. And, and to the members out there that may be listening to this after work hours, if you want to have an adult beverage with it too, that's certainly okay. But Coffee Conversations had a better alliterative flow. So that's what we went with too. So drink of choice though, but awesome. Okay, Tim, so we'll just get into it. Magnet's a young professional organization. A lot's been going on in the financial world since, early mid-March. So can you give us a quick, YP's guide to what's been happening in the financial world since the onset of the COVID-19 pandemic?
Yeah, happy to do so. Really to start off, like a lot of people have seen with the pandemic, it's affected the whole world. I mean, this hasn't just affected the United States. This has affected everybody across the globe, which has never happened. So when economists and other people are talking about this, they haven't experienced it. Nobody's experienced this type of essentially off button. We've just turned off the entire economy across the globe. So if you're looking at, the S&P 500, or people sometimes coin that as the market, starting January 2nd, the price of the S&P was 3,257. On March 23rd was the bottom, which it came out to 2,237 on that close. And then as of yesterday, the close of the S&P was 3,207. So we saw from the beginning of the year a 31% decline, and then as of yesterday, we saw a 43% increase since the bottom of the market.
Yesterday being June 9th, we're quoting it on June 10th. So.
Correct. Yeah, June 9th. So, outside of that, we've seen just extreme volatility and extreme depression within stock prices very, very quickly. It was one of the fastest declines that the world's ever seen. But what's funny about it is that we've had a lot more go on since then. So we've seen depressed oil prices that was kind of overshadowed by COVID-19. The oil market was having a lot of issues with Saudi Arabia, Russia. That created a lot of different things within the gas and industry market. We've also seen, as many people know, we're going into an election year, which is typically a little iffy for the markets. Now, would I invest or try to trade on an election year? No, it's long term. It's going to happen. I don't really care if you're red or blue in the presidential seat. I think the economy is going to continue to run as is. But there are some ramifications such as tax reform, depending on who's in the House. So we're going into that. We're still in a trade war. So the trade war was a big conversation up to COVID-19. That hasn't gone away. That's still going on. We're still fighting with China. We're still fighting with other countries. And that could really turn into something that is more impactful because you're affecting supply and demand, supply chains and different things there. We've had a stimulus package of $3 trillion come through since COVID started, which is insane. I mean, that was a lot of the Fed trying to pump liquidity into the markets to kind of hold them up. But some people also say, depending on what you read, that that is actually valued about 6 trillion. So the amount of actual money was 3 trillion, but they think the overall effect was more like a $6 trillion bill. There might be more stimulus on the way. We still don't know that either. The Fed may continue to pump the markets with liquidity. We had the Fed step in and do an emergency rate cut for the federal funds rate down to 0%. That was only the second time that they've done an emergency cut. I think 2008 was the first. So that was very unprecedented. And then they've also started buying into corporate bonds and other debt instruments. And they actually went about that buying ETFs, which is an exchange traded fund, which has also never been done. So what the Fed had done to step in to help support the markets was quite crazy. And then you've just seen this huge deviation from where the economy is going to where the market's going. So we've seen this huge swing back up within stock prices, but the economy, we still have a lot of potential unemployment. You know, depending on how you want to slice and dice that, a lot of people are furloughed. Are they going to come back to jobs? Can they come back to jobs? You know, are we going to have a vaccine, not have vaccine? So what's happened within the last 6 months has just been honestly unprecedented on all levels. And if you read people who've gone through serious depressions or recessions within my field, they'll say, this is a new playbook and we're not really sure how to play it because it's just, there's nothing guiding us to say, this is what's going to happen going forward. So yeah, that's kind of what's in my world has been going on. And it's a lot of volatility and a lot of heartburn, but it's been interesting from a historical standpoint, you know, at least to say, but yeah.
So compared to everybody else, you've had a pretty normal 2020 so far, it seems like.
Yeah. It's been a ride, you know. For us, it's more, we talk a lot about noise. So this isn't necessarily noise. This is very real, but if you are investing for the long term, you're going to have stuff like this happen. And there are the things that you just don't know. But do I think that the market's going to come back, or is it going to dip again, then come back again? Yes. So as long as you have a long-term time frame, you can kind of weigh out some of these things that you just can't plan for. Like it's going to happen. And who knew that we were going to shut the world economy off? Like nobody knew that. I always joke about saying, because leading up to COVID-19, we were on a 10-year bull run. And the United States wasn't doing great. It was one of the slower growing, so out of the Great Recession, it was one of the slowest GDP growth since a recession like that has happened. So we weren't on like the greatest footing. Corporate debt's extremely high. You know, if you're looking at sovereign debt across the globe, it's extremely high. So we weren't in like the best situation or best position. And then COVID-19 came along and really just kind of slapped us in the face. And if you're looking at it from that standpoint, it's like, oh man, you know, this is going to be interesting to see what's going to happen. And then with the amount of liquidity that the Fed pumped back into the markets, what are the long-term effects to that? You know, depending on what side of the coin you're on from a monetary theory perspective, it could be good, it could be bad, it could be neutral. You know, I mean, it's just so people just don't know. It just don't.
Yeah.
But if you have a long-term time frame, you can withstand some of that.
We'll set up a follow-up with you called Monetary Theory Mondays, and you can have 3 hours to go into monetary. No, but looking ahead, you just talked about kind of all the things that have happened, and how no one could have predicted the economy shutting down on top of all that stuff, and obviously, you know, no one knows what the future holds either. But to the best of your ability, what is the long-term or the future-looking outlook, short-term and long-term? That our members may want to keep an eye on?
From my perspective, and, you know, it's, again, people can grill me on my own perspective. There's just going to be more volatility. I don't see volatility going away. We've seen extreme swings within March and April. It's calmed down a little bit in the past, couple weeks, month or so. But going forward, I think we're going to continue to see more volatility. I think that there's potential for the market to go down. It could also not go down. But, the probability of it having, the swings like this is probably very high at this point. When people are looking at the market, you really have to understand that the market likes consistency and not uncertainty. And we're just in an uncertain world right now. And it's not just the COVID-19. It's what's going to happen. Like, what are we doing with the stimulus package? Is that really going to help? Is there a resurgence? Not a resurgence? If there is a resurgence, are we going to shut back down? I think that if we do have a resurgence that puts us back into quarantine, there's going to be a lot of businesses that are not going to survive. So it really just depends on kind of how things shake out, which then means that it's an uncertain world, and uncertainty means volatility within the markets.
Volatility in the market.
Yeah. And in the long run, I think that, the world will get through it. The world's gone through a lot of different events. And if you look back, historically speaking, at the United States, we've gone through the Great Depression. We've gone through World War I, World War II. We've gone through the Vietnam War. We've gone through hyperinflation. We've gone through, a Great Recession, and we continue to chug forward. So, it's really coming down to when you're buying into the market, let's say you're indexing, it's really betting on the United States as a whole and where you think it's going forward. Now, you may be a doomsdayer and say the United States is not going to be here. I would say that I would still bet on the United States. Do I think there's going to be returns like we've seen in the last 10 years? No. The returns have been, extraordinary. And I don't think we're going to see those type of returns going forward, but I do think we'll continue to tick up. But it's not going to be a straight line up. We're going to have dips. We're going to have swings. So as long as you can ride the volatility over the long run, you'll be okay. It's really like, unless you think the world's going to completely come to an end, which you have different problems and money, I think
your 401k doesn't matter when these asteroids that have been flying by finally buzz us. But no, I think anytime a situation like this happens in the market and the economy and all that, fluctuates, I always go and look at the historical graph of the stock market, and it like you said, it slowly goes up over time. You got to have the long-term mindset, not just the next 15, 30 days out in front of you too. So. You shared a lot of things that are not within the control of the average person. Things that are a virus, monetary policy, et cetera. But for our members, what are some actionable things that they can take themselves? Right, like let's focus on what we can control. Control what we can control. Do you have a couple of things that our members can be doing today amid everything else that's going on to ensure they've got a sound financial picture tomorrow?
So the biggest thing, and I will really be speaking obviously to the Magnet membership, which is a lot of millennials, right? A lot of younger individuals, like you mentioned, student loan debt, but cash is king, and you really need an emergency fund. And that's how you can position yourself. So when we talk about financial planning, we are always discussing with whoever wants to listen to us, our clients, prospects, whoever, it's you position yourself for the unknown. And in order to do that, there's certain steps to get a base level, right? And the majority of America doesn't even have enough in emergency funds and cash on hand to support not having a paycheck. So in order to be able to position yourself to participate in the market, to participate or get through some of these events that you can't control, having cash on hand, 3 to 6 months of total spend, is important. Now, a lot of people will say, well, I'm not making money on that money because interest rates are so low. I don't care. It's not the point. The point's not to make money on that money, at least not right now. Now, if interest rates continue to go up and you start making money, great. That's just a cherry on top. But the point of that is to have enough on hand where if you lose your job, an emergency comes up, your car goes down, that you have cash that you can pull from instead of pulling off of your assets. Because in the short run, volatility can hurt really, really bad, right? Because you can take out at the wrong time, you can get in at the wrong time. But if you can allow those investments to grow over the long run, 10, 15, 20 years, the more you can keep it in the market, the better. If that's in your 401k, if that's in a brokerage account, whatever it may be. And in order to do that, you need to have cash on hand. So that's number one, is like a lot of people just don't have that. And sometimes it's difficult to build up. It really is. It's not the easiest thing when you have a lot of student loans and things like that. But even to the point too, where a lot of millennials will go is like, I want to pay my student loans down as fast as I can. I understand that it can be a burden, but sometimes it's better to build up that emergency fund first. And then once you're done, because you don't want too much cash on hand. I'm not advocating to have, so much where it becomes inefficient. I'm just saying have enough. And then once you hit that goal, then it's time to, now you're positioned to say, okay, I can add to my student loan debts. Okay, I can add to my mortgage. Okay, I can put more into investments. Because once you build the base, then you can start building to the next phase. And that's really the biggest thing that I can say from just a financial planning perspective. And then investments, if you're going to invest in the market, then be willing to be in it for 10 years. Honestly.
At least 10 years.
At least 10 years. Just if you're going to put it in there, it's going to be gone. It's like, going gambling, right? So people always have the theory of, I go gambling because it's entertainment. I don't care if I win or lose. I'm just doing it because it's entertainment, right? I know that money's gone. I'm not spending money I don't have. It's the same thing within in the market. It's money that you're going to utilize down the road. So a lot of people will use what's called like brokerage or individual accounts for short-term goals. Well, imagine if you were saving for a short-term goal like your house and you had your money in the market and you just experienced a 35% decline. You don't have enough time frame to allow that volatility to spread out, to de-risk yourself. So it's if you're not willing to be in for 5 to 10 years, then don't put your money in there. Just don't do it. And a lot of people go, well, I'm missing out on gains, but you're also going to potentially have risk of loss as well, because you're going to have to take out at a certain time frame. So it's really just a long-term game. The market is a long-term game to play. It's not in the short run. But a lot of people try to, because it's that tantalizing, oh, I can make another $5,000, another $10,000. I just would argue not to do that.
The odds of you as a novice investor finding the next, Apple, Google, whatever it might be, probably aren't too high. Play the long-term game, which I think is sound advice.
The best. I have a friend that is I grew up in Salt Lake, and he's in the venture capitalist world, and he talked about Bitcoin, and he's like, there's a lot of people that made a lot of money in Bitcoin. And he said, and what's fascinating about it is people equate that to being smart. Like, no, it was luck. It wasn't. You can't repeat that. Repeat it 10, 20, 10, 15 times, and then we can start talking about that you're doing a good job. Just because you made money doesn't mean that you are smart doing it.
Yeah.
Money doesn't equate to success.
Yeah. Well, I think that's great advice, Tim. I'm almost done with my cup of coffee here. So the last question I have for you is, what's a good piece of parting advice for our members, whether that's, maybe a good financial book to read, how they should go about researching a certified financial planner. I mean, from, whatever you think might be relevant. What's one good parting piece of advice for Magnet members, given today's uncertainty in the economic and financial market?
My parting words would be to help educate yourself on your financial picture. So, it's very similar to dieting. For example, if you're going to do on a diet plan and someone asks you to track your calorie intake or your macros, and you're like, oh, I have a pretty good idea of what that is. But then you start tracking, you're like, oh my gosh, I didn't realize that I don't intake enough protein, or I don't intake enough fats. It's the exact same thing with finances. Is people intuitively usually have a pretty good idea of what's going on, but they really don't understand the details because it can be convoluted and it's time consuming. So it's like, if you can educate yourself on really what's coming in and out of your household from a money perspective, you can then start taking control of your financial picture. And that's what we help do. And I would also educate, if you're working with somebody, educate yourself on who you're working with. So independent registered investment advisors are extremely beneficial. Broker dealers are probably not the greatest. Now, that's not saying you can't find a good one, but if you're looking for somebody, look for someone independent, look for the CFP, look for CPWAs. Those are just added educations, but ask hard questions. We always tell people, the first thing that someone should say to me is, how do you make money? Incentives are a big deal. And I think that you should educate yourself on who you're working with, and then also on your own picture. And if there is one book within today's world, I mentioned this a couple of times on our podcast, is Thinking in Bets by Annie Dukes. Will change your world. It's fantastic. It's all about probability. She was a poker player. It's very well written, but there's a lot of impact there as well. And that's that would be the book that I'd probably recommend today. There's a bunch of other books, but that's for another conversation.
What was the name of that book again, Tim? I got to write that down real quick so I can.
Yeah, it's Thinking in Bets by Annie Dukes. It's fantastic.
Okay. Awesome. Well, we appreciate your time. Thanks for spending a cup of coffee with us and our members. If you guys do have any questions, Tim Bickmore with LBW Wealth Management. Tim, do you have a website or a podcast you mentioned that you may want to just mention if people are looking for information?
Yeah, so our website is lbw-wealth.com. And then you can find our podcast on that as well. And our podcast is on, I think, Spotify, Apple, Apple Podcasts. It's Critical Thinking Required. So if you search LBW or Critical Thinking Required, it should pop up. We started that a couple months ago. It's just something that we like to talk about this stuff. So we just talk about random things. But it's been fun. It's been fun.
Nice. Well, Tim, thank you so much. Appreciate you sharing some time with us, and hopefully see you at a Magnet event soon. Thanks a lot.
Thank you. Thanks.